Hello everyone, welcome to another short video on depreciation. In this video, we are going to talk about depreciation and look at three small questions. The first one is what is depreciation and why do we charge depreciation? The second one is two most common methods of depreciation. They are known as straight line method and double declining method. You can always refer to them as SLM for a straight line and double declining, which is DDB, commonly known as DDB method. The third and the last question is what is carrying amount? So let's start with our first question, that is what is depreciation and why do we charge depreciation? So depreciation is basically the cost of use of an asset. So when our company purchases an asset, they charge a depreciation expense for its use, and the reason why do we do it? The reason for why is basically it's because of wear and tear. So whenever you are using the asset, the worth of the asset declines over its useful life. So the second question, the two most common methods, straight line depreciation and double declining method. I will explain these two methods using an example in the upcoming slides. Along with that, I will be explaining what is carrying amount as well. With an illustration, these two questions would be perfectly understandable and very crystal clear, hopefully. So let's say we have an example where we will be calculating depreciation expense using the straight line method. So let's say we have company A which have purchased a machinery with a value of $10,000. It has a life of 5 years and $500 as its salvage value. Salvage value is also commonly referred to as residual value. So this could also be called residual value. So there's a very simple formula on how to calculate depreciation expense under a straight line method. The formula is basically cost minus residual value. I will call it as RV as a short form, and then divide by its useful life. So whenever you are looking at the question in depreciation, you should be able to spot three key things when you're using straight line method. The first one is the cost of the asset in this question is $10,000. The residual value, if it is provided, in some cases it could be zero, which basically means that the asset doesn't have any salvage or residual value. In other words, you cannot sell it off for any money. In this case, we have a salvage value of $500, which means that this is the worth of an asset at the end of its useful life. So useful life is again an estimate, all right, and the life of the asset here is 5 years. So life of asset is 5 years and residual value or salvage value is 500. So we will just input these numbers into formula, and tada, we would have our depreciation expense. So $10,000 minus 500 divided by 5. So if you do the maths here, you should come up with a number that is $1,900. So your depreciation expense would be $1,900. So for year one, you would have $1,900 as depreciation expense. Year two, you would have $1,900 of depreciation expense. Year three, $1,900. Until year five, you would have $1,900. So the key feature of this method is depreciation expense remains constant each year. In other words, it does not change. The depreciation expense does not change under straight line method. Moving on to the double declining method. So it's same example, same numbers, but it's just that it's a little bit different. And in the upcoming slides, you would also notice the difference. The first thing for a double declining method would be to calculate the depreciation rate. So first thing you would need to calculate depreciation rate. So how do you do that? There's a formula for that. The formula is 1 over useful life times 2. So in this case, if we look at this question, it would be 1 over 5 times 2, which would give me a depreciation rate of 40% or 0.4. Either of them would give you the same result. So for example, if you have to calculate depreciation expense for year 1 at this moment, it would be you would take the cost of the asset $10,000 times 0.4. This would give me a depreciation expense of $4,000 for year 1. In this case, we will not see same depreciation expense for year 2 and year 3, which was the case in straight line method. And hence, that's why it's called straight line method, because the depreciation expense is constant over the useful life. But in double declining method, that is not the case. So if you have to calculate the depreciation expense for year 2, the first thing that we would do is to calculate the carrying amount. So carrying amount. Now, this is the third question that was in our PowerPoint slides, carrying amount, right? So carrying amount, the formula for carrying amount is the cost of the asset minus the accumulated depreciation. So in this case, the cost was 10,000 minus, since it's only year 1, we did not have any depreciation expense prior to year 1. So our accumulated depreciation in this case would be 4,000, and we will just multiply by the depreciation rate. So 10,000 minus 4,000, this gives you 6,000. This gives you 6,000 times 4%, and you would have a depreciation expense of $2,400 for year 2. So you would have depreciation expense of $2,400 for year 2. So if you have to calculate depreciation expense for year 3, you would do the same thing. You would have to calculate the carrying amount first and then multiply it by the depreciation rate. Now, in this case, you would see what accumulated depreciation is very clearly. Accumulated depreciation is basically the depreciation expense of all the prior years, So in this case, we would have depreciation expense from year 1 plus year 2 when we are calculating the carrying amount for year 3, right? So cost was 10,000 minus the accumulated depreciation would be 4,000 plus 2,400, this is year 1, this is year 2, and then we would have a carrying amount of 3,600. Right, so we would have this carrying amount of 3,600. So 3,600 times 0.4 would give me the depreciation expense for year 3, and depreciation expense for year 3 would be 1,440. Similarly, you would do this until year 5. And in the next slide, I would have a table for you which will show all the depreciation expense for until year 5. And so you can see that here. So year 1, year 2, year 1, year 2, year 3, year 4, year 5, until year 5, because the asset's life was 5 years. This is depreciation expense for each year. If you want to calculate the cumulative, you can just add these up, and then you would get accumulated depreciation. So if you add all of these depreciation expense, you would get accumulated depreciation expense in here. And this is the carrying amount. Again, I will repeat, carrying amount is the difference between the opening carrying amount, you can say opening carrying amount here, carrying amount minus the depreciation expense, right? So it's 10,000 minus 4,000 is equals to 6,000. 6,000 minus 2,400 is equals to 3,600. 3,600 minus 1,440 is equals to 2,160 or 2,160. right? So this would be the complete table, or you can call it double declining balance method depreciation schedule. The main difference between SLM and DDB, one of the difference was the depreciation under SLM remains constant. So depreciation under this remains constant, whereas in this case, uh, it's it's not constant. It's not constant. So you can see this. It's not the same. Um, the numbers are different. The number are different. Whereas if we only talk about SLM, the depreciation expense is same throughout the years. So in double declining method, uh, the depreciation expense in initial years is more compared to SLM. So in DDB, the depreciation expense is greater than SLM in initial years. In other words, uh, higher depreciation is charged um, in DDB uh, when compared to SLM. So that is the key difference between double declining and straight line method. So just to do a quick recap on this quick video on depreciation. What is the depreciation? Depreciation is basically the cost of use of an asset, and why it is charged. It is charged due to obsolescence and wear and tear. The two most common methods of depreciation is straight line and double declining method. The formula to calculate depreciation under straight line method is cost minus the residual value divided by its useful life. So this is the formula. And another feature of this is that there's a constant depreciation expense each year, as we have seen in the previous slide. Double declining method, you need to calculate the depreciation rate first, and the formula to calculate the depreciation rate is 1 over life, useful life of the asset, times 2. And another feature of this was that higher depreciation expense is charged in the initial years of the asset, of the asset. What is carrying amount? It's just a simple formula. It is it's the value of the asset after deducting accumulated depreciation. In other words, the book value. It's also commonly known as book value. So book value minus the accumulated depreciation expense. Hope you find this video useful, and thank you for listening.